What's up, everybody? Today I'm going to make crypto simple. No jargon, no boring charts, just the basics you need to finally understand what everyone's talking about. If you've ever heard HODL or bull market and just nodded along, this video is for you. By the end, you'll be able to join any crypto conversation with confidence. Let's dive in. First up, bull market. Picture a bull charging, thrusting its horns up. That's what happens in a bull market. Prices are rising, optimism is everywhere, and everyone's excited. It's like a party where everyone's winning and the energy is sky high. People are buying because they believe prices will keep climbing. So, bull market equals sign prices going up, everyone's happy. Just remember, bull means up. Now let's meet the bear. Bear market time. A phrase that can send shivers down the spines of even the most seasoned investors. It's a period of market decline, often associated with economic downturns and widespread pessimism. But what exactly is a bear market? And how can you navigate its treacherous terrain? Imagine a bear swiping its paws down. This visual perfectly encapsulates the essence of a bear market, a forceful and sustained downward trend. It's a time when the bulls, representing upward momentum, take a back seat to the powerful bears. In a bear market, prices are falling, and they often fall sharply and consistently. This decline can affect various asset classes, from stocks and bonds to real estate and, of course, cryptocurrencies. The red candles on the charts become a dominant sight, signaling a period of contraction and uncertainty, and fear takes over. It's a natural human reaction to seeing the value of your investments diminish. This fear can lead to impulsive decisions, often exacerbating the losses. The party's over. The exuberance and optimism that characterize the bull market have vanished, leaving behind a sense of unease and apprehension. The mood is gloomy, casting a shadow over the financial landscape. The news is filled with negative headlines, and the overall sentiment is one of pessimism, and people start selling out of panic. This is often the worst thing you can do, as it locks in losses and misses out on the eventual recovery. Remember, selling low is rarely a winning strategy. It's a long, cold winter for crypto. The bear market can feel like an endless period of stagnation and decline, testing the patience and resolve of even the most dedicated crypto enthusiasts. But remember, bear markets don't last forever. They are a temporary phase in the market cycle. Just as winter eventually gives way to spring, bear markets eventually transition into bull markets. Spring always comes. The market will eventually recover and new opportunities will emerge. The key is to remain patient and avoid making rash decisions based on fear. Experienced investors see opportunity when others panic. They understand that bear markets can be a great time to buy assets at a discount, setting themselves up for significant gains when the market rebounds. Bear market equals sign prices down, creating potential buying opportunities for those who are prepared and have a long-term perspective. But it's just part of the cycle. Understanding the cyclical nature of the market is crucial for maintaining a balanced perspective and making informed investment decisions. Let's talk HODL. It's a term you'll hear thrown around a lot in the crypto space, but what does it really mean? Beyond the meme, beyond the misspelling, lies a core philosophy about investing in digital assets. It speaks to a long-term vision, a steadfast belief in the future of blockchain technology, and the potential for significant returns down the road. It started as a typo for hold, a simple mistake in an online forum post that has since become legendary. But that typo resonated with a community of early crypto adopters who were experiencing the wild volatility of the market firsthand. But now it means holding your crypto no matter what. Through the dips, the crashes, and the FUD, fear, uncertainty, and doubt, hodlers remain steadfast in their conviction. They see beyond the short-term fluctuations and focus on the long-term potential. HODL is about faith, a belief in the underlying technology, the team behind the project, and the future of the decentralized web. It's about trusting your research and sticking to your investment strategy, even when the market is telling you otherwise. Believing in your investment for the long haul, understanding that the journey to widespread adoption and mainstream acceptance is a marathon, not a sprint. It requires patience, resilience, and a willingness to weather the storms. Ignoring the ups and downs. The crypto market is notoriously volatile, and trying to time the market is a fool's errand. Hodlers understand this and choose to tune out the noise, focusing instead on the long-term trajectory. Think of it like never letting go of your favorite childhood toy. That unwavering attachment, that refusal to part with something you cherish, is the essence of hodling. Hodlers don't panic sell. They don't succumb to fear when the market dips. They see these dips as opportunities to buy more, to strengthen their position, and to reaffirm their commitment to the long-term vision. They're in it for the long run. They understand that building wealth takes time, and that the greatest rewards often come to those who are patient and persistent. It's a badge of honor in the crypto world, a symbol of resilience, conviction, and a long-term perspective. It signifies that you're not just a speculator, but a true believer in the power of decentralized technology. So when you see HODL, whether it's on a forum, a tweet, or a t-shirt, it's not just a misspelling, it's a mindset. A commitment to long-term investing, a rejection of short-term speculation, and a belief in the transformative potential of cryptocurrency. Hold on tight to your convictions, to your research, and to your long-term vision. Ride out the storms. The crypto market will undoubtedly continue to experience periods of volatility, but those who HODL strong will be well positioned to reap the rewards in the long run. That's hodling. It's more than just a word. It's a philosophy, a strategy, and a way of life for many in the crypto community. Next up, FOMO, fear of missing out. It's that gut feeling when you see everyone making money and you rush to buy in at the top. FOMO makes you act on emotion, not logic. In crypto, it's dangerous. Buying high, often just before prices drop. Don't let hype trick you into bad decisions. Take a breath. Do your research. FOMO is never a good reason to invest. Now FUD, fear, uncertainty, doubt. FUD is negative news or rumors meant to scare you into selling. It spreads panic, often for someone else's gain. Before reacting, ask, is this credible or just noise? Don't let FUD control your decisions. Stay calm, think logically. Remember, not every scary headline is true. Here's an easy one. Altcoin. Bitcoin is like Coca-Cola, the original, the most famous. Every other crypto? That's an altcoin. Pepsi, Sprite, you name it. Altcoin just means alternative coin. Ethereum, Dogecoin, Solana, they're all altcoins. Each one tries to do something different or better than Bitcoin. So Bitcoin is Coke, everything else is an altcoin. Let's dive into another key term in the crypto world. It's a term you'll hear often, and understanding it is crucial for navigating the digital waters. Whale. In crypto, a whale is someone, a significant player, who owns so much of a coin, a truly substantial amount. We're talking about holdings that can be worth millions or even billions of dollars. Their trades can move the whole market. Their actions have ripple effects, influencing prices and trends across the board. Imagine a giant whale making waves in a calm ocean. Everyone feels it. The smaller fish, the currents, everything is affected by the whale's movement. Whales can cause prices to surge, creating sudden and dramatic upward trends, or crash, leading to significant losses for other investors, just by buying or selling. A single large transaction from a whale can trigger a cascade of events. Traders watch whale activity closely for clues. They analyze transaction patterns and wallet movements, trying to anticipate the next big move. Whales are the power players in crypto. They hold significant influence and can shape the market's direction. Most of us are just little fish, navigating a sea dominated by these giants, swimming alongside. So keep an eye out for the whales and understand the impact they can have on your crypto journey. That's it. You now know bull and bear markets, HODL, FOMO, FUD, altcoins, and whales. You're ready to talk crypto with anyone. Drop a comment with any other crypto terms you want explained. If this helped, hit like and subscribe for more simple crypto breakdowns. Thanks for watching and taking your first step into the crypto world. See you in the next video.